Hello, I'm Jack of all trades, and today I want to talk with you about the Index ETF that I buy monthly. This is a very important part of the strategy that I follow. 50% of what I invest is into an Index ETF. Today I want to review which one it is and what my reasoning is behind buying this Index ETF. So let's start. I prepared a slideshow, so let's have a look. So what I want to talk with you about is, first of all, what is an Index ETF? After that, we will dive into why you would want to buy an Index ETF. I will give you some examples of renowned Index ETFs, and then I will share with you the one that I buy. And I will share with you how often I buy it. It's important to know that I'm not a financial advisor, so everything I share is my personal opinion or experience. If you want to buy anything, do your own research. Important to know that. So what is an Index ETF? Well, it has two words, index and ETF, so let's dive into them. An index is a measure that tracks the performance of a group of stocks. An example is the S&P 500. Another one is the AEX, which is the Dutch one, tracking the top 25 stocks of the stock market in the Netherlands. It represents a particular market or sector, and it provides investors with a snapshot of the performance. So if you look at the S&P 500 or if you look at the AEX, you will know how well the USA or how well the Netherlands is doing on the stock market on that day. An ETF is an exchange-traded fund, and it trades on the stock exchange, similar to individual stocks, and it is a basket of stocks. And it is designed to track the performance of a particular index, commodity, currency, or a basket of assets. And if you combine both of them, you have an index, you make an ETF that follows that index. Why would you want to buy an index ETF? The first reason is diversification. By owning one or several stocks, it is very easy to let your portfolio go up or go down a lot. But by buying an index ETF, owning a lot of different stocks within that ETF, you are more diversified. So because of that, your upside, but also your downside is limited, which will give you some safety if you don't want to have a lot of volatility in your portfolio. The second of all is lower cost. If you want to trade all the different stocks that are in one index, it will be very costly with all your transaction costs. But if you buy an index ETF will make sure that you will own all the stocks that are within that ETF, and you only have the cost of buying the ETF once. So that's very important, lower cost. Another reason is the less time that you spend. An index ETF is easy. It tracks a lot of stocks at the same time, and by buying it, you are following the average. But if you want to buy individual stocks, you have to know these stocks, and you have to do research into them one by one. It will take you a lot more time. So index ETFs are a lot easier. And the last one is index ETFs have a historical good performance. For example, the S&P 500, but also the MSCI World, has been doing really well the last years, better than most individual investors. So if you want lower cost, lower risk because of diversification, not spend a lot of time and have quite a good performance, then an index ETF is perfect for you. For me, there's two famous examples of index ETFs. The first one is the S&P 500. The S&P 500 is the 500 biggest US companies on the stock market. They have a total expense ratio of 0.07%, which is very low. And the index fund is accumulating, meaning that all the dividend that would normally be paid out if you own a stock is directly reinvested into the ETF. And it's good to know that it's a full replication, meaning that it buys all the 500 stocks in the S&P 500. The second one is the MSCI World. It doesn't just track the US companies, but it tracks almost 1,500 publicly traded companies from all over the world. It's good to know that they are from 23 developed countries. So it's not the whole world, it's the developed part of the world. The total expense ratio is 0.2%, so it's a little bit higher than the S&P 500. It's also accumulating, and it's sampling, which means that it doesn't fully replicate the whole world, but it takes a sample of it to represent the world. The information that you see on the right side is the information you need to look up these ETFs. And I got this information from justetf.com. It's a nice website to compare different ETFs. So what's my favorite index ETF? It's the MSCI World. It's the one that I buy every month. And the reason I do that is because I'm from the Netherlands myself. I'm Dutch. And I don't just want to track the USA, I want to track something that's a little bit wider than that. The MSCI World and the S&P 500, they have a lot of similarities, but yeah, the MSCI World is just slightly bigger. So that's the main reason for me to follow it. Because of this, I'm slightly more diversified because I'm tracking stocks from outside of the US as well. The downside is that I have slight higher costs. As you saw, the expense ratio is a little bit higher. So just to let you know what's in the MSCI World, there is, as I said, almost 1,500 companies inside. And the top 10 you can see on the left side. They are the companies that are also the top 10 of the S&P 500, so they should be well known to you. They are from different countries, as you can see on the right top. 2/3 is from the US, so that has a direct link to the S&P 500, but also other countries like Japan, United States, Switzerland, but also the Netherlands are included. It's spread over several sectors. Technology is a big sector, but also financial, healthcare, and consumer discretionary are important. And on the right side, you can see the returns from 2020 until 2024, which has only been a small month. There has been quite some profit, but in 2022, there was a loss. So in the last 4 years, 3 years were positive and 1 year was not. And if you look in the returns in periods on the right bottom, you can see that over the whole time, it made over 400% profit. And yeah, well, if you check the graph, you can see no matter at which time frame you look, it has made a profit. Remember though that if you made a profit historically, it doesn't mean in the future it will also make a profit. So it's not a guarantee for a profit, but it has always been doing well. So that's good to know. So the last slide, how often do I buy it? Well, for me, I buy the MSCI World every month. And my overall strategy is that 50% of my portfolio is individual stocks, and the other 50% is ETFs. And the biggest ETF that I have is the MSCI World. So usually every month, 50% of my deposit will go to the MSCI World, and the other 50% will go into individual stock. This strategy is called the core satellite strategy, and I made another video earlier describing what it is, so check it out if you want. Thank you for watching. I hope it was useful to you. If you got anything out of it, then please give me a like. It would be even better if you could subscribe so you can check out my other videos or see my future ones. And if you have any questions or just want to say what you think of the video, please leave a comment. Thanks for watching, and I'll see you next time.